Our first speaker is Sid Norris. Sid Norris has been an active investor, trader, and student of the financial markets for over 30 years. Since 2010, he has provided market forecasts for subscribers at his website, elliottwaveplus.com. Sid is best known for pioneering new ways to improve the accuracy and usefulness of the wave principle. In 2013, he started integrating Hurst cycle analysis into his Elliott wave counts with the objective of removing directional bias. Today, Sid is best known for taking Elliott wave theory to the next level by combining it with additional robust methodologies, thereby creating higher confidence, less subjective trading forecasts. Over to you, Sid.
Good morning. This is Sid Norris from elliottwaveplus.com, and I've got 1 hour to present a lot of stuff for you this morning, so I won't spend a lot of time introducing, but who I am and what I do. For that, you can go to my website, elliottwaveplus.com. Elliott has 2 L's and 2 T's. That's a fairly old picture of me there. And there's a lot of information at the site. There's also a blog. There's a lot of educational materials. But the thing I want to show you right here at the start is our terms of service / disclaimer. Please go to the site to read that in full. If I were to summarize it in one sentence, it would be, there's risk of loss in all trading. Okay, so here's my agenda that I'd like to try to cover today. I'm down, I can get to quite all of it, but we'll cover as much as I can. I also will keep the chat window open so that if there are questions along the way, I will try to notice that it's come up on the chat, and we'll try to answer questions along the way, time permitting. So today, the title of my presentation is How Our Method here at Elliott Wave Plus of combining Elliott Wave and Hurst cycle analysis is far superior to Elliott Wave Theory when used in isolation. And I'm going to show you some examples of how, when combining the two, it is much more predictive moving forward on trading, on swing trading, position trading. What my work attempts to do is to allow you to put on positions and hold them for potentially weeks or months or sometimes even years, and not have to sit there at the computer grinding away on 3-minute charts of scalping. The life is too short, in my opinion, to have to sit and do that constantly. So the first thing I'm going to do today is I'm going to show you how to apply Elliott Wave Theory to a chart. And the chart I'm going to use is FNGS. That's the FANGs ETF. And then I'm going to show you how I apply cycle analysis to that chart after we do the Elliott wave on it. Then I'm going to move forward and show you a whole bunch of examples of how the combination of Elliott wave and Hurst cycle analysis has been extremely predictive moving forward on several things. I have examples on Apple, Hang Seng, Shanghai Composite, and Baltic Dry Index. And then after that, if time permitting, I'll get into my proprietary sentiment positioning screenshots or sentiment condition screenshots, where I compare the positioning of retail traders to commercials and how excellent that can be over time in predicting major trend changes. And I'll show you examples of how accurate that system and helpful that system has been over time. And then, time permitting, we'll get to some items that sentiment is predicting are about to turn. that we're about to see a major turn on those items. So first thing I'm going to do is I'm going to go to a live chart of FNGS. So what is FNGS? Well, that is the FANGS ETF, FANGS ETF, and it consists of 10 FANGS stocks, and it is equal weighted on all of those stocks, and it includes Google, Amazon, Apple, Broadcom, Meta, Microsoft, Netflix, Nvidia. Um, the and those are pretty much all tech stocks. And so those stocks have been pivotal since November of 2022 in holding up the entire market as those stocks have continued to rip higher. They've had an inordinately large influence on the indices, So what I'm going to do first is I'm going to talk strictly about Elliott Wave, and then we'll add Hurst cycle analysis to it. So this is a chart of all of the data on FANGs. This ETF didn't start until sometime in 2021. But so we can obviously pinpoint that in November 2022, there was a significant and major low. And so from an Elliott Wave standpoint, we're going to try to, I'm going to show you how I think this counts as an Elliott Wave count moving forward. So, and then also on this chart, I've got an RSI, standard RSI that does color code whenever the price is overbought and whenever it is oversold. And that also can show us some divergences. So that, for instance, during this final leg down into November of 2022, during the second half of 2022, there was a significant bullish divergence that set up on the weekly RSI. Notice these are weekly candles, where the RSI did not make a new low here below the lows it was making back here, and that created this bullish divergence. And we'll talk more about RSI as we go along. But as this developed, and the price action to the upside on this item, it was pretty obvious along the way what was going on to me, and that it started with a very bullish 1-2-1-2. So in Elliott Wave, in an impulse, a non-overlapping standard impulse, it unfolds in 5 waves. So 1 in black, 2 in black. Black, by the way, is intermediate degree. 3 in black way up here. 4 in black. 5 in black. Now remember, this chart, what I attempted to do when I worked up this chart for you for this morning was to take cycle analysis completely out of the picture and try to look at it as I would if I was only using Elliott Wave analysis. So 1, 2, and then within black wave 3, there should be 5 blue waves or minor degree waves. 1, 2, 3, 4, 5. Also, at the wave 3 within the larger degree wave 3, you often get an extreme on the RSI or MACD if you want to use that. And then you also get an extreme, you generally get an extreme on the RSI at any point when there is a wave 3 peak at any degree. So within this 5th wave to the upside here, this would be 5th wave in blue to end black wave 3. We had 5 pink waves, or minute is the pink color. And notice that the RSI peaked here at the wave 3 of 3, here at the wave 3 within the wave 5, and here at the end of the larger degree wave 3. Then we get the wave 4 pullback down into August of 2024. So we'd expect this move up to be a 5-wave structure to complete black wave 5, and therefore 5 waves up from the November 2022 low. Now, if I was strictly just an Elliottician and I did not use Hurst cycle analysis, I would count this pretty easily as a 1, 2, 3, and an expanded flat for wave 4 underway. And I would expect wave 4 to finish pretty soon, typically. And now we're going to bring in some Fibonacci targets. Typically, a wave 4 will retrace 0.382, a Fibonacci 0.382 of the entirety of the wave 3. So this being a blue wave 3, would look for wave 4 to find support around that level. Is hard to read right now. Around 5407. That is where wave 4 would retrace the entirety of wave 3 by 0.382. Also, for a best target for the end of the 5th wave up, I would typically, and almost always do, prefer this target. And by the way, this is a Similog chart, and my Fibonacci tools are using Similog math. Not all chart platforms will do this. So you would not necessarily on every chart platform get these exact same Fibonacci targets. So, but normally a wave 5 is about 0.618 times the net traveled of 1 through 3. So now we're looking at black 1, black 2, black 3. So you look at that entire distance right there. Consider that a unit of 1. Take that times 0.618 and add that product to the bottom of wave 4, and you get this target right here. Way up there at 8176, that would be a normal target at the end of 5th wave. So if I was strictly using Elliott Wave and its associated Fibonacci price targets, I would look for this only to be a wave 4 and to look for a fairly long wave 5 still. And each one of these dotted lines is the year. So this was 2022, this was 2023, 2024 through here. Now we're in 2025. This is a live chart, by the way. You can see that FNGS is still heading to the downside. But it hasn't hit that target yet. Now, if it kept going down and overlapped into the price territory of wave 1, that would invalidate this count. So that would be a traditional Elliott wave invalidation. Well, anyway, Bob Fish, you made a very good point there. The black 2 and 4 usually, typically, will carve out a different structure, but that is not a rule. It's a guideline. That's a guideline, not a rule. So it doesn't hold true each and every time. So anyway, would look for a 5th wave up here. So this is strictly just using Elliott wave, and also I'm using R.N. Elliott's trend line system, connecting 2 and 4 with a line, and then putting a parallel a copy of that line at intersecting the top of wave 3, and it creates this upper channel, which is in danger of being violated to the downside today. So that is Elliott wave when used alone. So, but I don't use just Elliott wave. I incorporate Hurst cycle analysis. So here's a Hurst cycle analysis of the FNGS. Okay. So it's suggesting that we're at or very near a peak due about March 6th. So we're getting pretty close to that. We're a couple of weeks away from that. And that we should move down next into mid-June into this would be a 40-week cycle trough. That exact date is June 11. So like when I combine Hurst and Elliott wave, that means that around mid-June of this year, there's a large cycle trough due. And then it projects that we would move up only through mid-September. So mid-September is about right here. So that is suggesting that this is probably not this wave count is probably not correct. This wave count is probably not correct. That we're expecting downward movement starting in early March, all the way down into mid-June, and then upward movement into mid-September before moving lower. Also, another tool I use sometimes is the Cycle Finder tool at the Foundation for the Study of Cycles. And it agrees, this is FNGS, it was expecting a top in late January and expecting a move down through mid-June and then a move up through mid-October. Well, that's two cycle analyses that are suggesting that this wave count developed just using Elliott wave alone is incorrect. So I'm going to move to my actual chart that I show subscribers every week. And that is that if this is going to be called a 5-wave structure to the upside, a 1, 2, 1, 2, 3, 4, 3, 4, 5-wave structure, we probably seen the top. And notice that I've got some dates that I'm showing on the chart here and here and here and here, suggesting that we're going to be, that the FANG stocks are going to be in a bearish pattern all the way through approximately mid-2026. So I'm calling this a 1, 2, 3, 4, and this ever so slight new high right here, the end of the 5th wave up. It's almost a truncation. And so I just showed you that the composite line is bearish from approximately March 6th through June 10. So this is a program called Sentient Trader where I use Hurst cycle analysis. So obviously that is a bearish situation, and the next large cycle trough, in this case an 18-month cycle trough, is due in approximately mid-June, and it suggests that this movement that we're seeing to the downside right now is the beginning of a much larger move to the downside. So what I'm going to do now, and so that was, I just want to exemplify how when I combine Hurst and Elliott wave, it can nudge you into an improved Elliott wave count. I want to show you some examples going back now of how I've been using Hurst cycle analysis for 10 years. And have found it to be incredibly valuable in helping my subscribers stay on the right side of a trade. In other words, if the market's moving up, it helps my subscribers stay long, and it also lets them know about how long. You'd want to stay long. When I go back to this FNGS chart that I was showing here, before I put in those dates from Hurst cycle analysis, the roadmap was hugely different. And then even if this wave count ended up being correct, and then from an Elliott wave standpoint, after a full 5-wave up structure, all you'd really have at your disposal would be the expectation of a return back to the wave 4, one lesser degree, but you'd have no idea how long that was necessarily going to take or what form it was going to take. You might have an idea that, well, that might be a corrective zigzag, but it might not also, it might be several other different corrective patterns, a flat or a triangle. And so you don't know ahead of time what a corrective pattern is going to be and where the ups and downs are going to happen in it. When all you'd use is Elliott wave, you have to wait to see how the subdivisions unfold in order to project what's happening next. So you're constantly waiting to see if you get 5s or 3s moving forward. Well, in Hurst cycle, when combining Hurst cycle analysis, that's not that big of a deal, and you can kind of have an idea of how it's likely going to unfold moving forward. But back to the Apple example. In While I'm showing you that, I want to move to the long-term Apple chart. I'm going to show you something real quick on the long-term Apple chart. So this is my Elliott wave count on Apple, and starting way back in around 1980. And it started with a leading diagonal for wave 1, very large degree, cycle degree, and then a wave 2, then 1, 2, 3, 4, 5 for 3, and then a wave 4. That the low was in May of 2026. And then a 1, 2, 3, 4, 5. And it's possible the wave 3 top was there. It might have been here. Doesn't matter at this point, really. And then would need a 5-wave up structure from this wave 4 to this wave 5. Notice that I've got some Fibonacci targets on this chart. This Fibonacci target is where wave 3 of this very large 5-wave structure on a monthly chart would be a normal 1.618 times wave 1. And you can see that it came very close to that. And then the wave 5 target at 274 that I established years ago, where wave 5 would be a 1.618 expansion of off the top of wave 1. So if you figure this entire structure of wave 1, take that times 1.618 and add that to that top, you get a real early target for the end of 5 waves up. And you can see very recently we moved very close to that target. Here's a weekly chart of Apple. There's that burgundy wave 4 that occurred in late December of 2022. So, and notice that I've got some Hurst cycle analysis monikers or labels along the way. And this move to the upside ended up, I believe, finishing a 5-wave structure as an ending contracting diagonal. So, so the question is, what was I thinking, and what was Hurst cycle analysis suggesting in late 2023? And you can see that on December 20, the Hurst nominal model was suggesting upward movement from December 28 of 2023 through May 11, mid-May next. Now, at that time, you can see that my wave count was a bit different. I was expecting an ending expanding diagonal, and I was expecting a big move to the upside. So was bullish. My subscribers knew that to be bullish from late December through mid-May. Well, what happened is it moved up through actually into July. Now, it wasn't as aggressive as I thought it would be, but Hurst cycle analysis insisted on being on the correct side of that trade. I can tell you there were very few um, of these, very few bulls right there in late 2022. Okay, so what now that is what happened when we got to mid-May? So my initial analysis was that we were going to move up through mid-May, which it did do. That's this screenshot was taken from May 7 of 2023. And it did move up through mid-May, but by mid-May, Hurst was saying, yeah, this still has a way to go up through late July. And then it was projecting that after peaking in July, we'd move down into November. Okay. So what we did is we did peak in July and we did move down, not into November next, right there. So it got that direction correct. So what was I thinking in around November? Well, it's starting October 30. It was bullish based on Hurst cycle analysis up through mid-February. And Bob Fish, yeah, I know you're making a lot of comments about the Elliott Wave count, and here's the point. Here's the point. I've revised this Elliott Wave count along the way as to work in harmony with her cycle analysis. And what I'm showing you here isn't necessarily anything necessarily about the inner details of Elliott Wave. And as a matter of fact, those things really don't matter much when you consider what my topic is here, which is when to be bullish and when to be bearish, which Elliott Wave does not really help with that, especially during sideways corrective moves. So, I was bullish from October 30, starting on October 30 through February 12. So what happened then? That's from here. Oh, from here up through, and you can see it moved up and kind of stayed up on into early 2024. So what we're going to jump forward now. Actually, maybe I wanted to show this one. Yeah. As we got toward the end of the year in December of last year, it was expecting a move to the downside through mid-January and then to the upside through early February. So that was in at the beginning of 2024, and then looking for a move down through mid-year, July of 2024. So what happened next was we did get that move down into early January and up into February and down through mid-year. Down through mid-year. So all of that was correct months and months ahead of time. Then from that low, we started getting a rip-roaring move to the upside. So this screenshot was taken in July of 2024, and it was looking for a pullback into October. Well, we got up into July and we got to pull back only into August, but we really got sideways movement into October. Then back to a live chart. From about October of last year, there was a ripping move to the upside through late in the year. So here's the expectation. It was expectation of a move up from early November up into December. Notice by now I've been gradually making this wave count work along with the Hurst, and this was bullish through late in the year, and then calling for a pullback all the way into May of this year, 2025, and then a bounce into August of this year. So we peaked in December and have started embarking on a move to the downside. It was during this early stages of this thrust to the upside that I decided that this must have been an Elliott Wave triangle and a terminal thrust from the triangle. And I'd set up two different Fibonacci targets up here for the end of the thrust. This was bearish from approximately mid-December down through mid-January next. And for this, we're going to move into the daily chart, live daily chart. And so I was projecting that we would get a top there approximately mid-December, that this was a terminal thrust from a triangle, and that it would be that thrust would be completely retraced almost as fast as it went up. And as a matter of fact, it did retrace completely, 100%, slightly faster than it actually went up. So here's where I was projecting that the peak and a move down into mid to late January. There's the my chart to start the year. This was dated January 1, looking for a move down through January 25 and then a bounce through March 28 and then much lower. And as you can see, we got that move down into mid to late January, and now we're getting this bounce up into March 22. So at each and every, I've just showed you about a dozen charts of my wave count and combined roadmap of Hurst cycle analysis, and I defy you to find a way using Elliott Wave alone to do what I just did on Apple ahead of time. So that's Apple. Make sure I showed you all of them. Yeah, there's the plunge down into mid to late January, and then in mid to late January, I was looking for a rise up at least through mid to late February, and that's exactly what we've gotten. So that's Apple, and then the next item I want to show you is to prove to you that combining Hurst with Elliott Wave is far more effective and informational for a trader than just using Elliott Wave alone. So we're going to go to the Hang Seng. While that's loading up, I'll show you what I was thinking on the Hang Seng. On the weekly chart here on the Hang Seng, this is all these examples are screenshots I produced for paying subscribers at my site. So I felt like this was going to be an important low. It was not going to continue lower. That was in, I believe, February of last year, February of 2024, and was bullish up through March, down through April, and up into May, June timeframe. Bullish in 3 waves up. So here's what happened on the Hang Seng. That low that I just showed you, price was right here when I built that chart and was looking for 3 waves up into basically May or June. And you can see it did move up in 3 waves into late May. The next one shows you that by the time we got to mid-May, I was bearish down into late July next of last year, based on Hurst. And you can see that we moved down here, down into early August. Then in early August, I was bullish on the Hang Seng all the way into February, basically now, was bullish on the Hang Seng, expecting this to be a 1, 2, 3, 4, 5 to the upside, ready for the wave 3 to the upside. Here's what happened. Bam. You know, we got that call was made when the price was down here. They came up with that stimulus and it exploded higher. Many of my paying subscribers have told me that they've made a small fortune on trading the Hang Seng based on my charts. So it moved up through basically mid-October next. Well, in early October, this screenshot is from October 6th. I was expecting a pullback next into mid-November. We got a pullback into mid-November. As a matter of fact, that pullback ended up kind of staying down a little bit into the beginning of the year, but the direction was correct down into mid-November. When we got to January 12th, this is this screenshot, I was expecting that we would get an explosive move to the upside to complete a wave 5 of a leading expanding diagonal. And so it was bullish from January 8 through March 10. Here's what happened. So far we're getting this explosive move, and this appears to be ready to move on up, and for wave 5 to be longer than wave 3 was. 3 was longer than 1, and to complete a leading expanding diagonal. So I just showed you about a half a dozen screenshots of Hang Seng, each one accurately predicting where price was going to move next, without the benefit of seeing whether it started with a 5 or started with a 3, as all Elliottician only people need to see. Okay, well, what about the Shanghai Composite? Notice this very large cycle low that occurred in February of 2024 on the Shanghai Composite. This is a screenshot from February 4, and was extremely bullish on the Shanghai Composite starting in late January. And you can see that we had got an explosive move to the upside, but it peaked about in late May. Here's my screenshot that I gave to subscribers in late May. It was looking for a pullback next down into early July. What happened? We got a pullback all the way down into August, September timeframe. Very deep pullback. That would be pretty. Traders became profoundly bearish on the Shanghai Composite. But in August, just prior to that low, in the Shanghai, I was bullish all the way into December next. And you can see that there was a massive pop to the upside, and that was also based on stimulus. Well, when price was up near that high up there, I was expecting it to move down into mid-October, up into mid-November and down into January. What we got was basically identically that thing, a down, up, down move down into January. And then on January 19, I sent out this to subscribers. It was looking for a bullish move up through mid-year on the Shanghai Composite. And you can see that isn't the composite line has suggested it might not continue up all the way into mid-year, but only through mid-April. But we've been getting that bounce. So that shows how along the way my subscribers have been able to stay on the right side of those trades. I want to show you another call that I made here recently. And this one is pretty important moving forward. Let's go to shippers. A lot of people are having trouble finding something to get bullish about in the markets right now as far as how the charts are reacting. And I have been tracking the Baltic Dry Index for a long time. And this is a chart of the Baltic Dry Index. Now, some items don't constantly move in a longer term Elliott Wave structure, but you can still use Elliott Wave to count some of the shorter term structures. Now, this is a weekly, actually, it's a daily chart, and I'm just using the daily close, a line chart of daily closes. And I noticed that we were getting a 5-wave down structure here, followed by a really clear triangle, and then a 5-wave structure to the downside. So I established some Fibonacci targets down here for the end of this move. One is where wave C in black. So this was black wave A, and so that should be a 5 right there, by the way. But it was a black wave A, and so you take that times times 0.618 and add that product to the bottom of that, and you basically come up with a 0.618 expansion of the length of wave A. So that was his target here. And then on this 5-wave down structure here, we're getting pretty close to where wave 5 would be the most normal target I have found in Elliott Wave. And that is where wave 5 would be 0.618 times the net traveled of 1 through 3. So there was a very tight target zone down here for a bottom. Also, notice what Hurst cycle analysis was suggesting, that in early February, an 18-month cycle trough was due. So I'm not going to explain all the nuts and bolts of Hurst cycle analysis for you here, but the last 18-month cycle before that was right here. So this was an 18-month cycle. 18-month cycles are on average about 18 months from trough to trough. So this would be suggesting a multi-month, potentially multi-quarter rally out of that low that was forming inside of this Fibonacci target zone. And here's the way that turned out. So it ended up bottoming on the last day of January, and you can see how aggressive this move is off of this low. So this is shippers. So I found when I was developing this target zone for the bottom on this, I started looking at shippers, individual shipping stocks, and showing those to my subscribers, and showing that for a whole bunch of them, that same large cycle trough was due, and we're likely to move to the upside. I think what's happened on shippers is they've just been beat down terribly with the expectation that we were going to see a recession And frankly, I think we did see a rolling recession, but this is kind of indicating that these have become far, far too oversold to the bonds to the downside. Here's one, a 4.5 year cycle trough. Due is expected to rally pretty much all year this year out of these deep oversold conditions. Here's another one. And here's the amazing thing about some of these stocks. Won't show them all to you. But large cycle trough due. I developed an Elliott wave count on them. And this particular stock, for instance, it pays a 14% dividend yield and has a PDE ratio of 5. So a lot of these shippers are beat way, way down, but they're profitable, but they're priced cheap and they pay a huge dividend. So this is something I'm showing to my subscribers, and we're starting to get some movement out of these out of this recent low right around the beginning of the year on almost all of these. And then finally, I want to show you a call I made in the uranium sector. And for this, let's see, where do I keep this chart? I think I keep it here or something. So this is a chart I sent out to subscribers. CCJ is the second largest uranium producing company in the world. It's a Canadian company. And starting way back here in 2005, it had put together a pretty recognizable Elliott Wave pattern. So on this chart, I was strictly just using Elliott Wave. And each leg seemed to be carving out an ABC, which is typical in a diagonal, that each leg is an ABC zigzag. And then we had seen this move down in March of 2020. So COVID had just hit, and this stock absolutely capitulated down, and it created this throwover, a typical Elliott wave phenomenon at the end of a diagonal. And so I was projecting that this was going to be a significant and very large cycle trough low. The stock bottomed at $5.30. And here's what happened. So there's the end of that diagonal right there in March of 2020. And this uranium stock went from $5.30 all the way to $62.55 recently. And so it's more than tenfold increase. And I made that call right at that bottom. And it's moved up in 5 waves, 1, 2, 3, triangle for 4, 5. Now, after a 5-wave structure, there's typically a corrective period, and Hurst is projecting that we will see a corrective period. So many of my subscribers have lightened up on this, although since they got in way down here, they're just in huge, huge profitability factor on that call I made on CCJ. So moving back to my, see, we're not going to be able to get to the sentiment conditions screenshots because I'm running out of time. But I will show you very quickly sentiment on silver. So silver, we'll let that come up here. And I want to look at the sentiment, my 2 sentiment screenshots of silver that I produced for subscribers. One is a weekly chart, and I produce that for my premium plan subscribers once a week. And then my premium plan subscribers also get see if here we go. This is the weekly sentiment condition. Then they also get a nightly daily sentiment conditions on over 2 dozen different items, many different commodities. As a matter of fact, the weekly screenshots, just so you'll see, here's all the weekly screenshots that I produce for my premium plan subscribers. There's 1, 2, 3, 4, 7, 4, over 30 of them. Lots of commodities here. And so let's look at how accurate it's been on silver. When commercials are heavily long, this is the commercials positioning indicator showing how they're positioned in comparison with their most bullish and bearish positioning over the last 12 months. So when it's green, they're heavily long. This indicator down here is the daily sentiment index, and it shows the current percentage of retail traders that are bullish. So when commercials are heavily long and retail is heavily short, that is what we, just to simplify this, that's what we call a perfect storm of bullishness. And so we had a perfect storm of bullishness in silver develop in October 2021, and then we had a perfect storm of bearishness in developing March of 2022. Then we had the perfect storm of bullishness that developed in September 2022. Commercials heavily long, retail only 10% of retail traders bullish. Let this be a warning to you. If you are a retail trader, you are a trend follower, you're likely to be all over on the wrong side of the boat at major turns. Then in May of 2023, we had a perfect storm of bearishness again. And then we weren't quite a perfect storm of bullishness here in October 2023, but retail was at a 9. So anytime you get into single digits on the DSI, that is trouble for any further downside that you would see. And then you got a perfect storm of bearishness here. And so what's happening right now? Well, it's still a bearish condition on silver. Commercials are for the recently almost heavily short. Retail traders, 79% bullish. So this perfect storm bearishness that developed back here in late October, that condition still exists. That is bearish on silver. So very quickly, I want to show you my offer. My offer is, if you have never subscribed to any levels of my service, and I have 4 levels of service at ElliottWavePlus.com from $25 a month to $200 a month. If you never subscribed before, send me an email, sid@ElliottWavePlus.com, and say, hey, I saw you on the Elliott Wave Hub. I think I'd like to try out your service. I'm looking forward to getting a 50% refund off my first month. And I'll look for your subscription to come through, and we'll immediately refund 50% of it, whatever that is, 50% of the first month back to you. So I am out of time. Are you there, Jody?
Yes, Sid. Thank you so much. As always, this was a fantastic presentation. I'm sure everybody got a lot out of it. So check out Sid's website and you can see how thorough he is. He's just a fantastic analyst. Thank you, Sid.
Thank you. I'll stop sharing now.